Welcome back to another episode of the Conscious E-commerce Leaders podcast. And today we're going to be talking about taxes. I know it's not everybody's favorite topic, but if you want to save a decent amount of money on your taxes or you want to increase your after-tax profits, make sure to listen to today's episode. Now, I have Alan Chen with me here. He is a certified public accountant. He's the one of the founding partners of freecashflow.io, which is a leading accounting and consulting agency based out of Los Angeles, California. And they are focused on one niche and one niche only, which is online business owners, especially those in the e-commerce space. And Alan, along with his partner, has over 20 plus years combined in the fields of audit, accounting, compliance, taxes, and he has worked with even those larger multinational and 9-figure plus companies. So make sure that you listen to what he has about to say here. And his agency focuses on, or they offer an inclusive package where they take care of everything, whether it's tax planning, sales tax filing, and your threshold strategies, bookkeeping, smart cash flow allocations, and all of that stuff. So in fact, they are so confident that they can help you save money that they provide a money back guarantee. So there's totally no risk to you at all. I thought that was absolutely brilliant. And what I love about Alan is he actually ran a Shopify store before. So he's an expert when it comes to taxes and accounting, but he also understands like the day-to-day challenges of an e-commerce entrepreneurs. So I'm so excited to have Alan here. Alan, welcome to the show.
Hey, Vincent, thank you so much for having me on the show, and thank you for the amazing introduction.
Yeah, Alan, so I'm just curious here. Tell me a bit about your background and what got you to start your agency, and especially what got you to like focus on, especially on online business.
Okay, yeah, of course. So my name is Alan. I'm a CPA. I'm actually originally from Brooklyn, New York. And then my family moved down to the South where I got my master's of accounting and then got my CPA license. And actually started my career at Ernst & Young, one of the big four accounting and auditing agencies. And from there, you get to see a lot of these, companies that Vincent you're talking about, these multinational billion-dollar companies that, have the money and power to hire like a whole team of lawyers and accountants to do all their tax and compliance work, right? And then from us in the auditor perspective, we get to see a lot of that. We get to see all the tips and tricks that they have to help save these companies money. And, I'm sure you hear a lot in the news of these like Amazon, Facebook, and how they can get away with paying no federal income tax, right? And they're doing it, and you don't see them, really being investigated for it. And the reason is they're doing everything by the books. They're just really good at following every little tricks and every little tips, every little loopholes they can find in the tax code, which is super complicated and long, and then they apply it to the company. So for me, from this learning, and then from my Shopify experience last year, which is pretty incredible. But I can tell how hardworking entrepreneurs are because I was also a one-man team trying to do everything. From that learning, I was like, well, a lot of these business owners are already struggling with so much stuff they're doing, like site building, figuring out Facebook ads, getting banned from Facebook, and then doing inventory, talking to suppliers in China. They don't really have time to worry about accounting and tax. It's probably one of the last thing they think about, but it's so important. And that's why we really want to educate them on in this space, right? We realize that this is very much needed. These guys really need the help and someone who really understands their business and not just a generalist. So that's kind of our, I guess, inspiration for me and my two partners to start up this agency, Free Cash Flow.
Yeah, exactly. Like what you say, like usually taxes is like an afterthought, right?
Yeah,
so like for those, usually that's when tax filing season is, right? So that's when they start to worry about it. And especially for those in the US, when this episode comes out, it's probably tax filing season has already passed. And well, hopefully you have already filed your taxes if you're listening to this.
Yeah, hopefully by May. This year, because of the pandemic, they gave people a little extra time, right? Normally it's April 15, but this year was May 17. So I think we're recording right now around May 12. I know whenever this airs, hopefully everyone has already done their taxes.
Yeah. So tell us, like, why should people do that tax planning early, or because they have like already like this is like tax season is done. I probably don't need to worry for it for another year. But why should they like do their tax planning early, and why should they even care? Maybe like to even listen to this episode right now.
Yeah, that's a great question, Vincent. So there's this misconception, right, that tax planning is only around the April 15 or the May 17 date, right? It's like, oh, I mean, I have 20 days left, 15 days left. I need to go do my taxes, right? So actually, that is a huge myth because that's actually the end of the tax cycle, right? If you think about it, the taxes that matters is everything that happened the last year, right? So if you're filing right now, May of 2021, you're doing your 2020 taxes, right? You're caring about what happened during the year between January and December 2020. So a lot of time when you only think about taxes now, you're missing out a lot of possible tax deductions and credits that you could be doing and planning for during the year of the tax year, right? So this is actually the last part where there's a ton of things you actually can't do anymore. But if you do your tax planning as you go, right? So I know a lot of people stop thinking about taxes at this point of this when this episode airs. But actually, this is a great time to start thinking about it for next year. What can you do on a month-to-month basis in your business? How do you plan around it to maximize all the tax deductions available to you? Like the US loves entrepreneurs, and they really reward people for starting businesses. So, and it's really a shame if you give away the hard-earned money, especially I know how hard it is in Shopify. Like Shopify, when I was doing Shopify last year, I would work till 3 a.m. because I have a family, so I only gonna do Shopify at nighttime. So I'll go to 3 a.m. I was like, oh man, this is so much work. This is so much to do for a one-man team. I was like, I there's no way I have time to think about tax and stuff, but you're really giving away another form of I would say revenue, another stream of revenue if you don't really plan for your tax planning all year round.
Yeah, that's excellent. And so apart from, let's say they're just doing it, thinking about it when at the end of the tax season, what you say is the one serious issue that you see e-commerce entrepreneurs that they have when it comes to, or things that they're not paying attention to when it comes to taxes?
Yeah, so I think when a lot of people think about taxes, they only look at what they need to pay to the IRS on the federal level, or maybe even a state income level, right? And they forget about the third element, which is sales tax. And sales tax is a beast these days, right? Ever since the court case that was passed a couple years ago, South Dakota versus Wayfair, it really expanded the amount of online business owners that are affected by sales tax. Because what it used to be is what they call physical nexus, which is basically just means that if you're in that state, if you're physically located in a state, or you have a warehouse in a state, or you have employees in a state, that's the only time when you trigger sales tax. But now what they have is called economic nexus, which means as long as you have a concentration of customers or sales in a certain state, you trigger sales tax in that state, and you have to file and remit sales tax to that state. So if you think about online owners, right, they probably sell everywhere internationally and probably all 50 states, right? If they care about US customers, that could mean that if they don't really watch out for sales tax, it can get out of control fast. So if you're scaling really fast, right? You're like, oh, I found my product, it's doing really well. I'm in the 7 to 8 product range. You could possibly have tax implications in as much as 20 to 30 states. Right. And a lot of people don't think sales tax is, I just take the state tax rate and just, multiply it by my sales. But I really wish it was that simple, Vincent. The US really makes sales tax really complicated because not only is there a state rate, there's a city rate, there's a local rate, there's a district rate. They really get down to it. Like this local jurisdiction rates that you have to add to combine it with the state income tax rate to get the true customer rate. So, what one of the things we do with our client is we do a really in-depth customer concentration report where we really break it down for them to let them know, even on a zip code level or on a county level, where these customers actually belong. And then we try to figure it out to them. Okay, these are the states that you have cost threshold on, and this is what you should be doing now. But also on the other side, since we understand each state's threshold rules, we can also tell them things like, okay, this state's very lenient, so you actually have, even though you cost it right now, you have until January 1st of next year, so don't worry about it. Or the state is super strict. As soon as you pass it on May 12th, on May 13th, they make you pay, right? So don't get penalized because penalty is very steep for this stuff. Like some states charge as much as 20 to 30% of your sales tax if you don't pay on time. So you don't want to be the one doing those that forget about it and then get a letter in the mail about it. So yeah, that's going to hit you hard in the back end.
Is sales tax also like a yearly thing that you file, or is that like quarterly, or how does that work?
Yeah, so it really depends on your revenue level. So I would say that people who are making more than 300K in revenue, they ask for it on a quarterly level, or you had to pay penalties for underpayment. If you don't make that much, if you only make 20, 30,000 a year on an annual level, it's just fine. But if you are in the 6-figure or above range, I would definitely advise you to see if they are making you pay on a quarterly level. Then you really gotta look at it every Q1, Q2, Q3, in the March, June, September range.
Yeah, actually, an interesting fact is that I used to sell on Amazon also.
Oh, nice.
Yeah, and that was actually it was a few years back. So that was the time when they started this sales tax thingy. So
Yeah,
I remember it
yeah,
was very confusing, and I
it
believe it has
was.
definitely evolved and maybe even more confusing now. So is there like any apps or any software to like help to track, especially like you were mentioning, like you have to track like where the customers are, even down to the zip code level. Is there any app or software that can help them do that?
Yeah, yeah, for sure. I mean, there's because of how confusing it is. And one good thing about Amazon is Amazon does help you remit it. So if you are just a
Mm,
primary Amazon FBA seller, I think
mhm,
you have a little bit less headache than you're on the Shopify side.
mhm.
Shopify, they you're on your own, you know, you're on your own
Okay.
to know how to remit the right amount and everything. But yes, there are software out there that we can recommend. One is called Avalara, and one is called TaxJar.
Mhm,
These are basically made just for you can kind of import your customers list inside them, and then they'll run the correct tax rate for you out of it. But one thing I do want to caution is it is software, so it is automation. So they're not going to do the analysis part for you. So if
mhm.
you do have ways where you can, hopefully not have to pay a certain state, they won't tell you that, right? You just
Right.
get go and we make this money. But it is a great shortcut if you just have no idea what you're doing and you just need a software to hopefully get close enough, right, to not get so much penalty. So it is great for that.
Yeah, and when it comes to taxes, also some people think about like tax deductions, right? So what are some of those like not so well-known tax deductions that e-commerce businesses they can use?
Yeah, so we have a little YouTube channel. We actually just made a video of like the three easiest tax deductions that online
Mhm,
business owners can take advantage of. So I'm gonna explain some of those for you guys. So one really good one is, if you guys don't know, is with the whole pandemic going on, a lot of businesses are moving from having an office outside to bring it in-house now, right? They just have a
mhm,
home office now. So the home office deduction is one of I would say the most sought after deduction right now, because there's two ways of calculating it. One, there's the really simple way, which if I could recommend, if you guys are still doing taxes on your own, this is what you use. And it's really simple ways, it's really easy. All you do is you look at how much space in your house you use. So say you have 1,000 square foot apartment or house, right? And your office space is 200 square foot of that. You just take 200 divided by 1,000 to 20%. So that means sorry, not 20%. You just get 200 square foot, and then you times it by the standard rate that they give you, which is $5 per square foot. So in this
mm,
case, you just get 200 times 5, you get $1,000 tax deduction from your home office. That's a simple way. So you at least get some deduction. The little bit more involved way, it's called the actual method. And the actual method is, like the name indicates, is you actually get a percentage of the amount of space you use in your home for your deduction. So that's when the calculation comes in. So if you use 300 square foot of your home, of 1,000 square foot home, that's 30%, right? 1,000 divided by 300. So that means you can take 30% of a lot of things used at home. So that includes like utilities, rent, any kind of maintenance and repair things you do around the house, any kind
mm,
of repairs. So home mortgage insurance, rental insurance. So a bunch of things you can take, and that's a really big deduction. Like for a couple of our tax clients, we would get them around like $20,000-$30,000 in tax deduction for this. So it was a huge deal being able to do a little more analysis for them and not just take the simple method. The number of is
mhm.
great, but if you're going to hire an accountant, make sure they do the more complicated way, because you're paying them to do that, right? And that's one. Another great one is for those of you starting out. There's what they call a startup deduction, a startup
Mm,
cost
mhm,
deduction. So it's for those that are just starting out their business, right? So the IRS grant you guys a $5,000 tax deduction for those of you just starting out your business, which is great, because you're just starting out, you're probably not making too much money yet right now, right? So how the start cost deduction works is you can take any kind of deductions you normally do to really figure out if you're going to start this business, right? So it's
mm,
things like product research. So any kind of product research app you guys buy, or just general product research, any kind of traveling to look at suppliers. Like if you go travel to China to check out the inventory or check out the supplies there, that would count during startup costs. There's organizational costs. So any kind of filings, legal filings, structuring of your LLC, things like that, any kind of those
mhm.
charge, all these things will qualify for the startup cost deduction. So I would say just make sure you keep a good record of all those three things. And the last one is people can start doing more of is travel, right? So
Mm,
your business meals and your mileage is two big one that I hope people don't forget about. So it used to be that you can take 50% of your business meals for running your business, right? So,
mhm.
and that's great. But actually with the whole COVID going on, the IRS just implemented a new rule where you can use 100% of your
Wow.
business meal costs going forward, starting 2021 and forward. So it's even more of a can't miss deduction for those guys out there. And the reason is because they're trying to revitalize the restaurant industry, right? So they're trying to encourage more people to go out and eat at restaurants because they're trying to, build them up. So yeah, right now it's 100% deduction. So definitely don't be afraid to order that lobster, Vincent. Next time you go out,
Yeah.
if you're going to take that deduction, because it's 100%, you get the full meal deducted.
Yeah. So when it comes to like filing those tax deduction claims, like, is there like anything like, how do they know whether this can be deducted or this cannot? Where do you draw the line, like whether this is business related or not business related? And is there any type of filing that they need to do?
Yeah, so that's a great question. So one thing we always encourage business owners to do, Vincent, is we want them to really separate their personal expenses and their business expenses, right? Commingling them is really bad. Like if you somehow get audited by the IRS, right? They raise flags like, hey, I don't think you supposed to take this much deduction. They're gonna first look at, did you separate your expenses out very well, right? Did you keep a separate log, a separate bookkeeping, and separate bank account, and separate business credit card that can account for just the business side of your expenses? Now, I know the second part of your question is, how can you tell if something you're buying is for business use? I think honestly, it's if it's in a reasonable person's mind why this piece of something that you bought can be used as business expense, I would say don't be afraid to take it, right? If it can in any way help you with your business, I would say you can claim it. So like, for example, if you go out and buy a laptop, right? A laptop these days are one of the most essential things to run an online business, right? You need to use the laptop. So exactly. I would say if a business owner comes to us and say, can I write on my laptop? It's like, yeah, go for it. And if they're if they're out and they're working all day and they're saying, hey, I went out to eat, can I take my business meal deduction? I was like, yeah, if you're a full-time entrepreneur, right? That means your whole day you're working on your business. So it's very hard to claim that meal is for personal or for some other work, right? I mean, like if you're still like one of those entrepreneurs out there who still like, have a day job and you're running your business on the side, then I'll say it gets a little bit more muddle, right? Where you can, where there's some deduction you can take or not. But as a full-time, you're 100% dedicated to your business and brand. I would say there's a lot of things that you should be able to claim and you should do it, right? You should do it. But as far as like getting in like a better education, we actually have a course out there, Vincent. It's called Tax-Free eCom. And we were trying to fill this gap of like the lack of education and too much, I would say, Google searching and not finding the right answer. Sometimes, sometimes when you Google search, you get like conflicting answers, right? When it's exactly. Like, I don't know which one to believe. So we kind of try to make it more of an authoritative guide with like, hey, we're telling you these are the things you're allowed to take, so you can take it with confidence. So that's kind of why we spent 3 months filming this course, so we can educate kind of like the online business owners out there who have these questions just like you do, Vincent.
Yeah, that's brilliant. And one other thing here is that like many of our listeners, they are based in US, but there are also some of them that have businesses outside the US, but they are selling within US or they are thinking about it. So what are some of the things that they need to think about? Like, do they need to like set up an LLC or how does it come when it comes to taxes and all of those things? Like, what are some of the things that they need to think about?
Yeah, definitely. That's a great question, Vincent. So for our international sellers out there who's trying to set up something in the US, yeah, definitely 100%. I recommend you guys set up an LLC. And so there's actually a huge advantage I want to tell you about, Vincent, for international sellers. Okay, that's more than domestic guys with the US base. So for someone like me, right, I'm actually based in Los Angeles, California right now. I have no choice but to start my LLC in California, because I physically live in this state, right? So even if I go and start in like a Delaware LLC, California's gonna say, you live here, you're gonna have to start like another LLC in California. So there's almost no point. Yeah. So that I know a lot of people don't know about that. And when you Google search, it's a very confusing topic, by the way. But for the international guys out there, since you guys don't physically are located in anywhere in the US, you get to pick and choose. You can pick the states with the best filing fees, the best annual reports. The anonymity, like anonymous. Some states are anonymous. They don't tell anyone like who the real owner of an LLC is, right? So you can pick like the best advantage states, and usually the most recommended ones are like the Wisconsin, the Nevadas, Florida, sometimes Delaware. So I would say like for the international guys out there, you guys should pick a state that's most advantageous for you to set up your LLC. And because, it brings you a lot of benefits as far as having one. You can possibly set up a US bank account and, you can accept money in USD and keep it in USD, right? So that you don't have to go mess with transfer rates. You can also expand and get business credit card, which is, business. I think from what I'm hearing, I don't know about in other countries, but US credit cards apparently gives some of the best point rewards, right?
Yeah,
the credit card points
definitely.
rewards. Like I know one of the Chase cards that I really recommend a lot of our clients get, you get 3 times points for ad spend, So I know a lot of people spend money on Facebook ads, right? Google ads and stuff. So that's 3 times whatever they spend. So if they spend 50,000, that's 150,000 points. That's like a first class ticket somewhere, if you want to come visit the US and stuff, right? So yeah, I definitely recommend that they do start LLC because it gives them a lot of benefits. And that's something that if people are interested, they can come and DM me about, and we can talk more extensively about, because there are certain things you got to follow to make sure you set up correctly. So because the US are a little bit strict about it. If you just like some international person who they don't really know who you are trying to set up business here, so you do want to do it the right way and prove to them that you are trying to do a legitimate business here in the US.
Is there any downsides to creating an LLC?
Creating an LLC, I mean, I guess if you're trying to do things, on the up and up, like you're trying to be like clean and legal, I think the best way to do it is LLC. But yes, I mean, there is a downside, meaning that there are, once you set up an LLC, you are responsible for filing reports for it, for having the LLC. Like even if you don't make any money, you do need to remember to file that report every year to say that, hey, I'm still running this LLC, it's still active, and things like that. As far as tax implications, I think for international sellers, now this really depends on the country you're from. So I know, like, for example, I was just talking to someone from Hong Kong, right? Hong Kong has amazing tax rates for that country. I think it's known as one of the tax havens, right? So him being a Hong Kong citizen, he can basically, when he set up an LLC, he can put only certain parts of his business in the US side, and the rest is just on his Hong Kong business setup, right? Where then he might not have to be subject to the US taxes, where he's saying, okay, I make most of my money on the Hong Kong side. So Hong Kong is a territorial tax system. So they only tax you on money you make in that country, where US is a worldwide tax system where, if you're a US citizen, doesn't matter where you're located, they'll tax you for that money. So it's a huge advantage if you're in certain countries that have really good tax rates and you're just trying to set up a US LLC just for a part of your business, or it's like a service part of your business. So then you don't get a lot of tax hits, I would say, that a US citizen would have to do if you physically live in the US.
Yeah, that makes sense. So I'm curious about this. Like, you also have services that you offer. So what's the difference between what you do versus like those typical accountant CPAs that you can find on Google, or those even on Fiverr, right? So what are some of those
you
differences?
really can. These days, you can find anyone to do your bookkeeping or anything anywhere, right? Like Upwork, Fiverr, anywhere. Yeah, so I think one of the things I would, like for like listeners out there to really hone in on is when you hire a professional like that, you really want that person to have a deep understanding of your business, right? Someone who's not going to come in and just say, oh, let me just give me your numbers, I'll put it on the form and file it for you. Like in serious tone, Vincent, like filing a tax return is not too complicated. If you can read some form, put in some numbers, it's kind of easy. The hard part is the analysis behind it, right? Is understanding what tax deductions you qualify for and what credit you guys should be taking on that form, right? Because if you're just putting some numbers down and at the end of the day you're like, oh, you have a $40,000 tax bill and you gotta pay it, that's that. It's like, it feels bad, when you don't have a good enough explanation of why you're paying so much, and you're just like, well, I guess this guy I hired from Fiverr told me I have to pay this. You put it on the form, it must be correct. So I don't want to get in trouble with the IRS. I better pay it. So that feels really bad for us. What we do is, we're very like personalized service. We're not just the type of I would say accounting firm that just stays with you during tax season and then disappears. We're kind of like your outsourced CFO office, if you would, where we're always around for questions. Like when we get a new client, we immediately set them up in a Slack channel. And then we have basically a one-on-one communication channel with them, right? Where anytime they have a question, they just pop in and ask it instead of Google to ask us, right? And then we will try to answer them in one day. And then that's kind of like how we work for everything that we offer, right? For our bookkeeping, for our sales tax, for and federal income tax and filings. We try to make it so that they have a control and understanding over everything we're doing for them, and why when we're doing it for them, we're doing it based because we have all this data. We have all this eCom and online business data that we can compare their books to, right? We can say, hey, this guy is also a nutritional brand. You're a nutritional brand. He can get this deduction and this credit. You are in a similar revenue level, similar cost situation. Why couldn't you get this deduction, right? So we don't miss on this because of our algorithmic way of looking at it. We run it through our system, so then you don't miss out on the deductions you're supposed to be taking, and that's real money back in your pocket, Vincent. That's like that 40,000 tax bill, maybe reduced to 20,000, right? That's 20,000 back that you can put into your business to help grow it.
Yeah, excellent. So for those listeners who may not be ready for your services, but let's say the revenue is not there yet, Alan, you were mentioning just now about your tax-free eCom course. Can you tell me a little bit more about that?
Yeah, so for our agency side, we really do want to only take on clients that we really feel like we can help, right? We don't want unhappy clients at our agency, right? We really want those type we can help. And usually for us, we notice that that's the range for that is around, like, let's say 500K to 5 million, around that number. But then we do also get a lot of messages from people that are under that number, but still they have made a good significant amount of money and they're worried about taxes and it's keeping them up at night, right? Yeah. So for those guys, our response was we spent 3 months. We film a 9-module online, I would say, tax, business strategy, and bookkeeping course for them. And basically all these modules breaks down all the things that they really should know about as they start their business and they start to grow the business. So they don't run into any of these like pitfalls and forgetting to do things, right? We really tell them every compliance thing they should be worried about. We tell them all the tax deductions they could be taking. We tell them all the business strategies they can be implementing. And the thing is, when they take this course, even if they don't end up working with us, that's fine. I want them to be able to have the education to ask the right questions to their whoever accountant or CPA they're working with. They're like, hey, there's a course I listened to. It talked about R&D credit. What have you looked into that for me? And I think education is just key. We don't expect them that just because they took this course they're gonna do everything themselves. I think the more important thing is just education, having that knowledge that I should be looking out for this. I shouldn't be missing out on this much money. Just retirement options that I can take, right? Like the solo 401k plan that's just built for entrepreneurs that I can be missing out on like $50,000 tax deduction possibly and help grow my retirement income. So it's things like that we that's why we really put hard work behind this course and really want to get this course out there to help fill that gap. We feel like it's not abound in the online business e-com space right now.
Yeah, that's excellent. So how do they go about signing up for this course? And I believe you also have a special discount, right? That for our listeners.
Oh yeah, definitely. Anything for you, Vincent. So yeah, we have a discount code. I think it's gonna be called Vincent-20. I'll definitely send that to you, Vincent. But it's for listeners of your podcast, so then they can really take advantage of this course at this discounted rate. We really see as being, jam-packed with value, hundreds of $1,000s of savings in there. And I think it's really going to open up your eyes on a lot of the business strategies and tax things that we may not have got a chance to talk about on this podcast, but it's all in there. It's really value packed. And if you guys do want to take advantage of it, we have the course at our freecashflow.io /course, and you can access it. I can give that link to Vincent to include. But yeah, just check it out, guys. We really think it's going to help you guys grow your business and think of it in a new light and find out about this new revenue stream called tax profit.
Yeah, awesome. So I'll definitely include that the link to that website and as well as the code in the show notes. And so, Alan, for people who they want to follow more of your content or they want to ask you questions, what's the best way that they can do that?
Yeah. Thanks, Vincent. So they do want to check out our service. Our website is freecashflow.io. We also have a little YouTube channel set up where we try to just give away like a lot of tax deduction knowledge to people. It's hard putting out content, but we're trying to put out 2 videos a week right now on our channel. It's just called Free Cash Flow Agency. That's the YouTube channel. And then if they are interested in our service and want to book a consultation call so we can kind of talk and see if we can fit, they can also book a call at freecashflow.io /book.
Yeah, awesome. So make sure to go ahead and check out those links and also check out the course. So Alan, before we wrap this up, is there any final thoughts or any things you'd like to share that maybe I didn't ask?
No, I think you did a great job asking a lot of great questions, Vincent. One thing I just want to emphasize with the audience out there is, really just, you guys work so hard. Like I was a Shopify entrepreneur last year. I see the hours you got to put in to really make a business work, right? Especially working by yourself. I just want to emphasize for you guys to make sure you are keeping what you're earning. Don't give it away so easily, right?
Right.
Don't listen to the first accountant you find and they tell you to pay this enormous amount of money, and you're like, okay, I guess I have to pay it. And you really start seeing that, oh, the amount of profit you thought you were making is suddenly shrinking. So you just make sure that it is important to get help, of course, in a various amount of fields. Make sure you're getting someone who really understands your business to help you. Whether it's a marketing agency or an ad agency or anyone like that, just make sure someone to really understand it and really can increase that ROAS for you, right? And
Right.
on us for Free Cash Flow, that's our whole purpose. We really understand online business owners, really understand their business, so we really try to maximize their tax savings. But anyway, you should always have this thought in mind to keep the hard-earned money that you're making out there and for putting in so many hours as an online entrepreneur.
Yeah, excellent advice. And thank you so much for being here, Alan. It was a pleasure.
Yeah, thank you so much, Vincent.